Good morning and welcome back to Almus Market Mornings. Now, an important development which we had been tracking was of Adriana Kugler, who is the member of the Board of Governors of the Fed. Her term is expiring in January, and President Trump has yesterday announced Stephen Miran to serve after her term ends. One interesting tariff-related impact we are observing is in the spike in COMEX gold premiums. So today morning, the premium of December future over spot is at $110. This is after the Financial Times reported on a letter by US Customs, which has said that the 1 kg and 100-ounce gold bars, which are deliverable against most contracts, should be classified under a customs code, which is subject to levies. Good morning, JK. What do you make out of Mr. Miran's appointment and, of course, the gold premium spike? And I am also interested to know about yesterday's rupee strength in the offshore market. We saw sharp strength in rupee immediately after the close. Any thoughts on that?
Yeah. Good morning, Swaraj. Yes, Stephen Miran's appointment is not totally surprising. He's one of the closest confidant of Mr. Trump, and he's been on the. He's considered to be the architect of the tariff policy that Trump has pursued, and is probably he will be one who will follow a dovish policy at the Fed, although he's now going only as a replacement of Kugler, who has resigned. I think going forward, as we are also getting into a situation where more and more Fed members are turning a bit dovish, so it could be another additional influence for the Fed decision on rates in the coming meeting. As far as the COMEX gold is concerned, yes, I think the fears that there will be tariff on imported gold is also adding to the COMEX futures, and there is a huge demand on, for deliveries under the contract. Also, there is a fear that there can be default on futures contract. Therefore, there is also good demand for physical gold. This is what we are hearing, and of course, the situation is evolving. And there is also another slight kind of rumor that is circulating that some central banks may resort to revaluation of their gold reserves, and definitely US could be one of them, but not confirmed. So these are several factors which are actually playing out to support the gold, and of course, the when as and when the demand increases, either in the uh, exchange or in the physical market, it reflects in the the futures prices premiums also. And as we know, dollar has also resumed some sort of a downtrend after the non-farm payroll report last week, and that is also supporting the gold futures. Now, on the rupee, yes, most of the day we were in a very narrow range of almost 10 paise, and we did hear about the nationalized banks offering above 70, 87.70, and the previous day they were offering at 87.80. Not just because they were offering, it's also because some possibility of MSCI rebalancing flow that the market was talking about later, amounting to $1 billion. And since we have had this negative news on the tariff and sanctions for quite some time, and the rupee has not had a upside break above the previous high, so could have been some, liquidation of long positions in the dollar, even as the dollar index has been steadily falling since last Friday. Its dollar index has actually fallen about 2.5% from the highs that was seen ahead of the non-farm payroll. So, not surprising. Yes, I think it doesn't change the underlying picture because there's no, relief on any of the tariffs or sanctions. Although there is some indications that the talks are on as far as the Ukraine-Russia ceasefire is concerned. So if there is a positive development, that could actually lead to more strength in the INR. So it's more, right now it is some flow driven, and I think dip at 87.20 is eagerly awaited by buyers. As far as the global markets are concerned, we had a couple of data points. One from US, where the weekly jobless claims actually went up for the first time after 5 weeks of drop. and it was 7,000 up, and not a big number. But now this is all seen in the background of the weakish monthly jobs report. And there is also, some analysts saying that the weekly jobless claims data collection has been very erratic, and therefore it may not be fully reflecting the uh, job market situation. More, you look at the continuing claims, which again yesterday went higher to October 2021 high, and so that's actually more reflective, because that indicates how people are finding it difficult to find a new jobs, and the claims stay higher. So number was not so supportive of the dollar, and also the fact that previous numbers have been taken with quite negatively has led to dollar selling continuing. We also had the MPC meeting in UK. It was one of those rare meetings in the MPC where there had to be two votes for getting the decision. It was tied, and then later on, with the narrowest of margin, the votes, rather the decision was taken at 5-4 majority. It is first time in the history of MPC that the second vote has been required to reach a decision. Of course, it also ended with the Governor Bailey emphasizing that further cuts would require caution, as while the rates are on a downward trend, inflation challenges and economic slack warrant a gradual action. So this actually supported the pound, which went up above 1.34 yesterday, having been under pressure for some time now. There is a downsizing of expectation on rate cuts by the MPC in the coming months. We had some good data from Eurozone retail sales, which has rebounded in June, rising by 0.3% after a minus 0.3 decline. At the same time, the industrial production in Germany was quite negative. So it's kind of mixed number in Eurozone, but Euro currency actually ignored these numbers, and it has been steadily moving up. And now the whatever the move that we are seeing in the dollar is more to do with the underlying trend of diversification that is going on. Why and going actually by the the trend that we are seeing in the dollar, we had actually expected much more deeper correction in the dollar to the upside, but that has not happened. We'll have to wait and see if we see a break of 1.1725 on the euro, for instance, or 97.50 on the dollar index. We could actually more confirmation of the resumption of the underlying trend. So that is how we are seeing it. China also showed some recovery hopes, as both imports and exports have gone up much more than expected yesterday, although the net trade deficit, trade surplus has come down. That's because their trade numbers with the US has dropped. So all in all, dollar seems to be, once again under pressure. Gold is also leading the charge on the upside. It's only the crude that has fallen once again yesterday, after yesterday and day before, after the rumors of another output hike by the OPEC, and even as there is doubts about the sustainability of the current level of demand. We see the rupee also getting some impact from the dollar's weakness. At least it won't be breaking into new highs until we see some new development on the tariff front. So market awaits inflation data from US next week. That's the most important number to watch out for. Otherwise, it should be on a steady range. Thank you.
Thank you, JK. And when it comes to COMEX gold, of course, there's a fear on tariffs on the imported golds, but also the broad dollar weakness. Dollar which has resumed a downtrend after NFP last week, and this has also supported gold. Rupee seemed to benefit from this weak dollar, and along with that, an MSCI equity rebalancing flows amounting to $1 billion. That also helped rupee's positive sentiment. When it comes to global markets, weekly jobless claims was higher. Continuing claims was at October 2021 high. It reflects people are finding it difficult to sort of find jobs. UK Bank of England cut rates by a narrow margin due to a division of votes cut by a 5-4 vote margin, 25 basis points. And oil has continued its losing streak. There's another rumor of an OPEC output hike. At the same time, whether the current level of output is commensurate to the demand that's there in the market. That's it from us today. Thanks for listening. Have a good weekend. We'll catch up on Monday with a fresh round of updates.